Hello and welcome to the free video for simpleroptions.com. My name is Don Kaufman. I'm actually filling in for John Carter in today's video, and we're looking at markets just after the close here with the S&Ps down some 18, Nasdaq futures down 66, Dow futures down 178, and the Russell futures down about 22 points. However, the futures contracts and markets as a whole did make an amazing recovery towards the end of trading. And what you're looking at right now just happens to be an intraday chart of the S&P 500. And of course, quite the drastic move to the upside coming right into the close with some very, very extreme, and that would be, to say the least, extreme contract size coming into the close. In fact, I've been doing this for, the better part of about 18 years in trading. Very few times have I seen contract size this substantial and significant into the close of trade. If you are looking at this right now, you're reading that correctly. Over 115,000 contracts trade, okay, at the cash close today. The subsequent minute, and I actually took this down to a 1 minute chart, the subsequent minute, 54,000 contracts. Clearly, the contracts that traded at the close were to the buy side. However, in the after hours trade, and we're just about 12 minutes after the close here, we've started to slip back off just a little bit. So the only thing you can really say about today's markets and today's trade, wild. Okay, really, volatility was the name of the game ultimately in today's trade. Some extremely chop trade, some volatility kind of hitting markets today. With that, there happens to be a bright spot. So if you're looking at the S&Ps today and you're thinking, that's it, we've seen the top, and the world might be coming to an end over here. Well, let's not forget, okay, we're stone's throw away from the all-time high in the markets. We've had ultimately 2 down days in a row. 2 down days does not make a down market. And the one bright spot, specifically to today's market, is when you look on a percentage basis. All right, so the S&Ps here, they're down not even a full percent today. And yeah, I'm using the S&P futures, not even down a full percent. The other bright spot, though, and what's really been hanging on to the markets like grim death, happens to be specifically the financial product. Now, the financials, okay, over roughly speaking the last month, have moved very, very little. Now, they did start to fall off as the day progressed over here. However, it's the financials yesterday, the prior day, that have really held on, okay, to the marketplace. And that is, if you look at the sheer magnitude of the financials versus the S&P 500, and one way to represent that is to look ultimately at a heat map here. In this heat map, you can see the financials, okay, which are obviously a major component of the S&P 500, are the second largest sector in the S&P 500, right behind information technology. If it weren't for Apple, okay, the financials would actually be larger. And again, many of your financials today were down negligibly. So in the coming days, we're going to be looking specifically towards the financials. Are the financials possibly going to break lower? And one way we can use that, of course, to gauge is the XLF. So again, financials kind of hanging on like grim death in today's market. Another bright spot in today's market, with all earnings and everything aside, I'm much more focused today like, hey, listen, the S&Ps have been getting hit the last 2 days, and I'm more focused on the broader markets over here. The other bright spot was both Walmart, okay, and many of the other, all right, really consumer-related stocks and retailers had a bit of a bounce back from yesterday's hit. Now, this happened to be the sector that was getting hit the hardest yesterday, both Walmart and specifically Target. Target down a negligible amount today, but again, kind of reeling from yesterday's losses and did not specifically have follow-through. One of the darker spots, however, for markets as a whole, well, the largest market cap in the entire S&P 500, and really in any market for that matter, Apple. And Apple alone describes why the Nasdaq futures on a percentage basis got hit as hard as they did. In the last 3 days, Apple coming off the 134 and change level all the way down into the 125 handle. Fairly substantial move to the downside. So where do we go from here? Really, in the next few days of trade, there's a few things that we're going to look for. Clearly, we're looking, are the S&Ps going to be breaking lower? There could be some signs, okay, of that. Number one, I would look specifically to the bond products. Are the bonds, okay, going to start to rally? When I say bonds, now, I bring up the ZB or the ZN. The ZB is representative of the 30-year U.S. Treasury bond futures. If you take a look at the ZB, if the bonds start to rally back up, okay, could that mean risk is imminent for the S&P 500? And the answer is most likely yes. And throughout the course of today, you can see we're not just well off the lows. We've actually rallied all the way back on the bond product, which again, the ZB had a low of 158. Okay, actually closed the day at 159 and 25 ticks. That is one substantial move after the fact. They were down almost a full 2 points coming off the lows of the day. Okay, very surprising. The S&Ps held up as well as they did. If the bonds continue to rally in days to come, it's very likely to put pressure forth to the financials. Bonds rallying are going to take the yields, the interest rates lower. Lower interest rates spells trouble for financials. The financials break lower, it's very likely to take the S&Ps along with it. Last but not least on that front, we'll also take a look at volatility. The VIX and the volatility futures really were not drastically impacted by the selling today. It's rare to see the S&Ps down almost 20 points, and the VIX, it yawned. And by say it yawned, an 8% move to the upside in the VIX. Now, we've all seen the VIX have some substantial moves to the upside, in months and years past. But here, okay, again, with a 20-point down move in the S&Ps, or roughly we closed down 1750, okay, yeah, we had a bit of a move up in volatility, but again, a little bit of a sleeper. So again, in the days to come, the things we're going to be looking for, bonds rallying, S&Ps, do they start to continue to sell off? And more specifically, watch the financial sector. Okay, if the XLF does start to break lower, okay, even if the S&Ps hold on for a day or two, these financials have had very little movement, as you can see, inside of over a month of time. All right, a very, very tight channel. They look to be set up to possibly break a bit lower right now. That's exactly what we're going to be looking for to see if there's follow through to the downside in the S&Ps. Thanks a lot, everybody, for joining us for today's free video. Bye-bye.